Welcome back. You're watching The Money Show and it's time to answer your portfolio queries. And with me, I have Aditya Shah who will be answering your portfolio queries live on the show. And just in case you want to send across any question that you need our expert advice for, you can WhatsApp us your queries on our WhatsApp number. You can also email us your questions and we will help you align all your financial investments with your financial goals. Hi, good evening, Aditya, and welcome to the show. Let's begin with our viewers' queries. And this is Rajesh's question that I'm taking first. Sorry, his name is Vivender Singh. That's what he says. He's from Jaipur, Rajasthan, 39 years old, and he's got 4 funds: UTI Nifty 50 Index, 2750 investment amount, Parag Parikh Flexi Cap, Bandhan Small Cap, and Motilal Oswal Mid Cap. So he wants to invest for 20 years, and just a year back he began his investment, and he will be doing a 10% step up also in these funds. So he wants to know how can he accumulate 3 CR via this portfolio, and whether there's any other addition that needs to be done. He also wants to add a gold and silver ETF. So he wants to know how can he go about it.
First of all, if the investor does 9,500 SIP every year for the next 20 years, assuming a 10 to 12% return, the investor will reach anywhere between 70 to about 90 lakhs, which is lower than the investor's desired return of about 3 CR. So the investor needs to do 2 things. Either he can elongate the time period. If it is possible to elongate the time period to about 25 to 28 years, then he can make it at a return of about 12%. Other way around is to increase the SIP amount. If the SIP amount can be increased to 20,000 per month, then he can reach his goal. To double out the SIP in the shorter term is really very difficult for anybody, let alone this investor. So as the investor was doing, can step up the SIP by about 10%, or increase the amount that he is investing every 3 to 5 years to double that out, so that he can reach the goal. Now on his funds, since he's doing an SIP of 9,500 only, there's no need to have 4 to 5 funds. What the investor can do is investor can invest in Parag Parikh Flexi Cap Fund 2,750, Bandhan Small Cap Fund where he can invest about 3,750. I've kept a small capish bias on the portfolio because the investor's time horizon is really very long. Last one he can invest in is Motilal Mid Cap Fund of about 3,000 rupees. Now the investor also asked for advice on investment in gold. The investor can use the Nippon Gold Bees that is available, and that is a good investment to make. A digital investment in gold would be an ideal choice through a mutual fund. So these 3 funds, together with an increase in the amount of SIP he is doing, and a gold fund if he wishes to add, is something that he should be really doing.
All right, so that's the take. What's your take on multi-asset allocation fund? Because a lot of investors right now feel the FOMO of not investing in gold and silver. You think for investors like Vivender himself, it's a right stage to add in a multi-asset allocation?
So multi-asset allocations are good fund, but they still cannot replace your own level of financial planning. You first have to do a financial planning where you need to invest in real estate, debt, equity, and gold. First, you need to decide your own asset allocation. And once you have decided your asset allocation, within that, you can invest in multi-asset allocation fund that can be used to contain the downside in times of turmoil for equity market. As we have seen over the last 1 year, the equity market has not done well, whereas the gold has given spectacular returns. So to contain downside, you can do a multi-asset allocation fund. But since this investor's time horizon is really very long, I'm assuming that he will do asset allocation at his own level. And I've tried to go aggressive on the small cap side of it, because there is a lot of alpha that can be generated if an investor time horizon is at least 15 to 20 years.
All right. Let's move on. Let's take Rajesh Sahni's question. And he's from Kanpur, and he's working in Nigeria, and he is doing SIP of 90,000, HDFC Flexi Cap, Motilal Oswal Momentum 500 Nifty, HDFC Mid Cap, Bandhan Small Cap, Kotak Contra, HDFC Multi Cap, and he's got Motilal Oswal Micro Cap as well. and he wants you to review for the next 8 to 10 years. He plans to stay invested. A new SIP of 30,000 per month, that is what he plans to do. Whether to add a new fund or distribute the amount in these existing funds is something that he wants to know from you. Goal is 1 CR for daughter's marriage, and rest of the corpus is needed later on. And HDFC mid-cap fund, he will continue for his children's 17 and 14 years respectively. Okay. Yeah, that's it.
So first of all, I need to congratulate the investors. Even though he is an NRI or he does not stay in India, he's continued his investment in India. India is an excellent market to invest in. So congratulations to the investor for that. Investor should formulate his goal. I think he must have bigger goals than only the marriage of his children. I think education as well as his own retirement is something that he should cater for when he's investing in the mutual funds. Now, he's got too many funds in his portfolio. I have picked out 4 funds. He wants to do an SIP of 90,000 plus 30,000. So I've given him a split. HDFC Flexi Cap Fund, he can invest 30,000. Bandhan Small Cap Fund, he can invest 40,000. To give a passive fund, I have given UTI Nifty Next 50 Index Fund, where he can invest 30,000. And HDFC Mid Cap Fund is where he can invest 20,000. These 4 funds are already in his portfolio. He can continue to do SIP of about 1,20,000 into these funds. He said after 8 to 10 years, he wants to lower down his allocation, after which he should switch either to a balanced fund or slowly start to move towards debt fund when he wants to, when his goal is coming nearby. But good investments he's done, he can just tilt his investments into all of these 4 funds and he should be okay.
All right, so time to just consolidate and make a few changes for him. And interesting, it's a good set of funds and a good amount as well. But having said that, the time duration is 8 to 10 years. I also want you to help him with the exit strategy from equity, when he comes closer to his financial goal, Aditya.
So when you come to your financial growth, slowly and steadily, you have to move out into balanced fund and debt products. Balanced funds and debt product have a lower risk that is there, and slowly and steadily, 2 to 3 years before your goal, you should start to move towards debt products, and finally, a year before your goal is due, you should completely exit into a debt product from where you can remove money slowly and steadily. The closer your goal, the lower should be your equity exposure and higher should be your debt exposure.
All right, with that, it's time up on the show. Thank you so much, Aditya, for being on the show and helping our viewers with their portfolio queries today. And for all our viewers, time to sign off, but I'm going to leave you with our WhatsApp number and email ID, because that's a place where you can get connected, you can send across your questions, and we do your life financial planning on the show every day. Thank you so much for watching. Goodbye.